Good afternoon, everybody. I think my colleague Marlies has given you entrance to this webinar. I'm going to wait about 1 or 2 minutes to start with the presentation because there are some more participants joining us. Today we will have about 30 minutes talk about the 30% facility. I will just explain why we'll do it in English because most participants are speaking Dutch, but because of the topic we are talking about, it is probably best to do it in English because perhaps some participants will be speaking English, and we are also recording this webinar, and perhaps some companies can use it for possible employees so they know something about this 30% facility. Today we have two speakers. My name is Sander Verbaarschot. I am a tax advisor at Nelisca, the Dutch life science accounting firm. I will be taking care of the first couple of sheets relating the tax involved issues. And Marlies Hol from BG.legal, she is a labor law lawyer, and she will take care of the last couple of sheets, and she will introduce herself at the point when we get to her part of the sheets. We have about 20 participants, I suppose, and my idea is to just go through the sheets. I have about 6 or 7 slides, and if there are questions, you can save them for the end of the presentation, or if you have an urgent question or a question you want to ask immediately, that is not a problem. You can just unmute yourself and ask your question. I will try to answer it at that moment. I hear some more bleeping, so I suppose there have been some more entrance of participants in the last couple of minutes. I have told nothing from the sheets already. I've just introduced myself, and I will now start with the next couple of slides to tell you something about the 30% facility. The program for today, first I will explain some of the benefits of using this 30% facility, then the conditions in order to obtain this facility. The third topic will be the request procedure, how you will get this 30% facility from the Dutch tax authority. And then I will stop my part of the presentation and Marlies will take over for the labor law issues and end with the Q&A. First of all, the benefits. What is the 30% facility? It is a possibility for Dutch employers to get foreign employees to get to work in the Netherlands. So incoming employees, that is important. The 30% facility is a compensation for relocation costs. So if you are, for example, a company vested in Os or in Den Bosch, for example, and you would like to get a Spanish employee to get to work for you, then this person will come to the Netherlands and look if he likes to work here, if he likes to live here, so his family will also visit our country. And perhaps living in the Netherlands is more expensive than living in, for example, Spain. So you have some extraterritorial costs, so they are called that way. And as an employer, you can give a compensation for these costs. This compensation can get up to an amount of 30% of the total reward, and it will be without taxation. So that is the benefit, is a tax-free compensation. And you can give this compensation for a period of maximum of 5 years to your employee. Well, the benefit is then, of course, the employee gets a higher net wage because up to 30% of his wage is without taxation. And the benefit for the employer is he will have less wage costs because the taxable wage, that's the amount on which he has to pay social contributions, national contributions, social health insurance contributions. So therefore, both parties benefit from this 30% facility. Then the next step, what are the conditions in order to obtain this 30% facility? Well, of course, you have to have a situation of paid employment, so an employee and an employer. And this employee has to have some specific expertise. I will get back to this point at the next slide. Also, this employee has to be recruited from outside the Netherlands. And that is there are also some more rules for that, and I will get back to that on the second slide. And at the last relevant topic, you have to have a valid decision from the Dutch tax authorities.
Is this Ibiza? Or?
No, it's like a background.
It's
from Windows.
Well, I was a bit.
No, I think so.
There are some people talking.
Ivan, can you maybe? Yes, thank you. Your mic on mute,
Yes.
please. Thanks.
Yes, thank you. I'm going to continue. I just said there are some conditions in order to obtain the 30% tax rule, and the first was you have to have paid employment, and the second is the employee has to have a specific expertise. Well, it is pretty difficult for the Dutch tax authorities to measure if somebody has a specific expertise. So therefore they have said, well, we'll take a measure that is just objective to be established, and that is how much money is this company going to pay for this employee in order to get to work for this company. And that means you have to have a certain amount of a taxable wage. The main rule is that an employee has to earn a taxable wage of at least 39,467 euros this year. But if this employee is younger than 30 years and he has a master title, then the taxable wage may be lower, it may be over 30,001 euros. And then the question is, most cases, such an employee has had his master's degree at a university outside the Netherlands. And in that case, the master title has to be of the same difficulty as a Dutch master degree. And then you have to have a valuation of your, let's say, Spanish master title by the Dutch organization. And in the Netherlands, the organization NUFIC can take care of this. And the costs are about 150 euros for them to establish whether the master title of a foreign university also qualifies for as a Dutch master title as a level of quality. So in that case, a younger person can get a lower taxable wage threshold. And if you come to Netherlands to work as a scientist at an assigned institute, for example, at the university, then there is no minimum wage demand. And well, in this case, you could think, oh, well, if I'm going to pay my employee about 40,000 euros, then he will qualify. But it's a bit more complicated because you have to look at the total reward. That's the last topic. Because the total reward, let's say, for example, if you pay your employee 50,000 euros and your tax-free compensation can be 30%, but 30% of 50,000 euros will be 15,000 euros. And the taxable wage, if you deduct the 15,000 euros, will be 50 minus 15 is 35,000 euros. And that's too low regarding the main rule of 39,467 euros. So in that case, you could solve this by giving this person a lower tax-free compensation because you don't have to give them 30%. You can give them at the highest 30%. So in my example, if you give a total reward of 50,000 euros and you give a tax-free compensation of 10,000 euros, then your taxable wage will be 40,000 euros, and that's more than the 39,467. So in that case, the tax-free compensation would be 10,000 from the 50,000, so that would be 20%, but still 20% without taxation. And so that's how the specific expertise will get looked at. The next slide. The third demand in order to obtain a 30% facility is that the person coming to work for the Dutch company has to be recruited from outside the Netherlands. So this means this person has to have been living outside the Netherlands for the last 24 months, at least 60 months. And he has to have been living more than 150 kilometers from the Dutch border in a straight line. So if this person has lived in Belgium or in Luxembourg, that's not far enough. If he has lived farther, so let's say Spain or Italy or parts from Germany, then he will qualify for this 150 kilometer demand. Another situation is if this person has been working at a Dutch company and moves to your company in the Netherlands. So it can be a continuation at another Dutch employer within 3 months after the end of the previous Dutch employment. So this means if, let's say, a Spanish, for example, employee comes to work for a Dutch company and he has worked there for 3 years and he comes to work at your company, then you can use the 30% facility for 2 more years if he comes to work with you within 3 months after ending his previous employment. And an important part of this is that the ending has to be the end date of the actual working. So if the previous employment agreement ends on 31 of December, but he stops working at the 5th of December, then from 5 December, the 5th of December, then this 3-month period starts to go. Then another topic, how do you get this 30% facility? Well, you have a request form that's on the website of the Dutch tax authorities. You have to fill in this form. So you have to fill in the name of the employee, of the employer, information about when he starts, and you also have to add some attachments. You most of the times have to send in the resume of the employee and the employment agreement, and in some cases, if this person is younger than 30 years, also the master diploma from the foreign university, and in some cases also the NUFIC appreciation of this diploma. You have to send in this request within 4 months after the starting date of the employment agreement. This is important because if you send it in later, then you will still get the 30% facility, but there will not be it will not work back. So, for example, if somebody starts working at your company at the 1st of January, then you have to send in the request form within 4 months. So let's say if you send it in March, then you will still be able to use the 30% facility starting the 1st of January. If you send it in let's say May, then you can only start using it in May. After you have sent in the request, then the Dutch tax authorities check the request, and in some cases they have some other questions about sometimes they want proof that the employee has been living outside the Netherlands, so you have to send in a rental agreement or bank withdrawals, proofs of that. But that's just it depends on who you have to deal with from the tax authorities, how strict they look at it. But after they have done their check, then they will give the decision from the Dutch tax authorities, and then you have your permit to use the 30% facility. So that's the last step. You can use the 30% tax-free compensation on your payslip. And from that moment on, the employee benefits from the 30% tax-free compensation. And to make it clear, in my example, if somebody starts working at the 1st of January and you get the decision from the Dutch tax authorities only in, let's say, March, then you can make new payslips for January and February and use the 30% facility already in these payslips. I think I have told, I'm going to take a, yes, I have told the most important issues on a tax facility. There are also, of course, there was a lot more to talk about it, but for now I will keep it at this. And if there are some more questions, then you can ask them at the end of the presentation. So that's it for me now for the tax issues, and I will hand it over to Marlies to talk about the labor law issues.
Yes, thank you, Sander. If you will just all give me 1 second, I will share my screen for my part of the presentation for you. But first of all, I would like to give a short introduction about myself. My name is Marlies Hol. I work at a law firm in 's-Hertogenbosch called BG.legal. I have been working at the labor law department for almost 2 years, and before I worked here, I worked at another firm and I mostly help businesses, MKB businesses most of the time, with labor law, and it's a very wide section. So I help organizations at the beginning with employment agreements, pay slips, but also when there's conflict. But for today, I will focus on the 30% ruling. And I heard what Sander said, and I will continue on it. And if you just give me 1 second, I will share my screen with you. Here you go. If something is wrong with the image, you can say it in the chat, and Sander will read the chat from now. And also I saw that some people joined us later. I also said it in the chat, but this video is recorded and will be shared afterwards, and also the sheets will be sent to all of you. So even if you were a bit late, no problem. We can share all the information with you later on. For now, I have some information about labor law issues concerning the 30% ruling. And first of all, it's good to know that from a short period, the tax benefit is shortened for just 5 years. It was until 2019, 8 years. And even before, I think Sander just told me it was 10 years. So a lot has changed, and we still help companies who have people with the tax benefit for 10 years, excuse me, but also from now on for 5 years. And it is possible that the duration is shorter because the employee previously worked or resided in the Netherlands. And if you have an employee that worked for another company in the Netherlands, it's important, just as Sander just told, that you can still apply for the tax benefit for a total of 5 years. So if an employee has been working somewhere else for 2 years, you still have 3 years remaining, but the switch of employers should have been within the 3 months. If you have an employee that is living in the Netherlands for 3 years and is maybe 6 months without a job, then it's not possible anymore to get this tax benefit. So that's something to check when you have an employee who wants to apply for this ruling, to discuss how long has he already used this benefit. Second, also the second sheet, the second bullet in my sheet, is that the 30% ruling can be used in a permanent or a temporary employment contract. So for the tax benefit, it doesn't matter whether or not the employment contract is for a fixed period or for an invalid time. It's good to discuss this with your employees as well, so they know that even if they are given a 6 months contract, that they can still use this benefit. Other important thing to notice, and to be honest, this is maybe the most important thing I want to share with you today, is that you need to inform the employee not only about the beginning of the 30% facility, that he can use it and what it means, but mostly that it is a temporary facility. So it will end. And for some people, the tax benefit applies for 10 years. So for 10 years, your income is higher, but at a certain moment it stops, and the wage will simply be lower for an employee. And it's very important to inform them at the beginning of the contract, in the contract, and my advice would also be to inform them again 1 month or sooner before the tax benefit is no longer valid, no longer applies for this employee. And I've been thinking about a way to make sure that you as an employer will not get into trouble after the 10 years, 8 years, or 5 years of the tax benefit when the 30% ruling ends, because you want to avoid an employee to claim the higher net salary, the net wage, because it will make a big difference, because the wage of these employees, because they are well-skilled employees, it will be higher. So the difference will be higher. To avoid that you have to pay up for the difference, my strong suggest would be to insert an article in your employment contract. It can be a standard article where you say that the benefit is temporarily and that it will end, and I would even suggest to name the end date. When you have a temporary contract, you don't need to do that because the contract will most likely end before the tax benefit ends. But when you give someone a contract, a permanent contract, I would suggest you consider this at the front to prevent that your employee can afterwards claim a higher salary, to make sure the net wage doesn't change for him or her. This is 2 bullets, 2 points that are also noted in the form you need to fill in, the application form. To be honest, I've seen that a lot of companies just put, I don't know the word in English, a vinkje, you know what I mean, just say, yes, first point, we did agree on the 30% facility, and yes, we agreed with the employee that my employee's taxable annual wage will stay above the required income level. But the question is, if you really have agreed upon those 2 points with your employee. So just saying it is not enough, you need to prove it. Well, best way to do so, if you ask me, is to or do so in writing, just a letter to go, or emails, perfectly fine, with the employment contract, or put it in the employment contract. Because I know that in a business some documents can get lost. Most companies keep the employment contracts, but not all the letters around it. So please, if you have the opportunity, put these 2 points in your labor law contract, in your employment contract, so that you can always prove that you have agreed upon these 2 points with your employee. And just before I end, I want to address these 2 points shortly. First point is that you explicitly need to agree that the 30% facility is used. So it's not enough to say, well, you should know this or something like that. You really need to prove that you agreed both to use this facility. And second, and this one is more interesting for me because I see that a lot of companies don't do this properly, is that you need to agree with your employee that that his or her taxable annual wage will stay above the required income level after applying the 30% facility. And it also means that the reimbursement could also be less than 30% of the agreed wage. So it's possible that you give someone not 30%, but 20%. You only need to do so to avoid that the wage falls below the required income level. Because when the wage falls below that level, the employee will no longer be eligible for the 30% ruling. To be honest, because most of these employees earn more money than the required income level, it doesn't have to be a problem, but check it, because otherwise you may have agreed to an employee that he or she gets the 30% facility, but then the application can be denied. And that could mean that he or she has to pay the money back, and they can start a trial to try to get the money back from you. Stuff like that is something you want to avoid. So please take the time to read the application form and really be precise when you make an employment contract. You can make one standard employment contract and you can keep on using that, but please take the time to do that good and correct for once, and you will have a lot of benefit from it. And that, to be honest, is me for today. Well, Sander already told you some interesting things. The last sheet is just maybe you have questions, can be about the presentation, can be about your situation or something else. If you do so, you can use your microphone or say it in the chat. I suggest Sander and I will just wait a little while if there are questions. If I see him nodding, then I think I know enough. And otherwise, if you don't have any questions, I would like to thank you for your time. And also, I would again say that the sheets of this video, the sheets and the video will be shared afterwards. It will also be published on our websites, of course, without all the names of the participants, but you or your colleague can look at it later. And I'm looking at my colleague. Are there questions in the chat?
Yes, there was one question. I think also a good question, perhaps a bit difficult to answer, but the question was, how can an employee claim a higher wage? Are there any legal rights? And that is in relation to the situation that what you described, if a person gets the 30% facility for, let's say, at the actual period of time for 5 years, if it is going to end and this person has been used to a high net salary, and it will be a bit lower because when the 30% facility will be not available, then he'll have to he will have a lower net salary. Can he claim that he has a right for the high net salary, or is he just out of luck and is his period over now?
Well, it will be difficult. To be honest, it will be difficult for an employee to make this valid claim. And that's because it's, well, I would say obvious that it is temporarily, but the risk you are taking as an employer is that if you don't inform the employee that the salary, the net salary will change, when this facility ends, then you are taking a risk that he says, well, I didn't know that, and I don't want my net salary to be this low. Otherwise, I would have never agreed upon this salary. There's no outcomes from judges yet, for as far as I know. But I have had this question in the past sometimes. And to be honest, I would like to avoid every risk, because it is possible that the judge says, well, this employee doesn't really know the Dutch rules because he is from another country and he is in a more vulnerable position. He was not informed that the 30% ruling will end, that it is a temporarily facility. So it is possible that a judge will say that you as an employer need to compensate the employee for his damage. It's a risk which I would like to avoid, because you can do that very simple.
Yes, and maybe in addition, I have had this matter at hand also several times, and perhaps the employee has no legal right, or it's a bit difficult, as Marlies explained. But you also have the situation that you want to keep your employee satisfied, and he will not be satisfied if his net wage will be a lot lower. So if you talk about this topic on time, and you can see if your gross wage will be a bit higher than 5 years ago, you can talk about the situation, then maybe they will have more understanding for it. But it's always important to keep your employee informed about the situation, so they will know what the situation will be. That's always better than get into a legal situation. But that's just a practical matter.
Yes, but it's very good because you want to avoid that they will be unhappy, unsatisfied, and it can lead to another discussion that could have been prevented, maybe.
Exactly. Well, Marlies, there are no other questions in the chat. So if there are people having another question they'd like to ask, they can go right ahead, and otherwise they can always ask their question by email to you or me, so we can get back to it on that matter.
Yes. Well, then for now, again, I would like to say thank you for your time, and Sandra and I will close this presentation for now. And well, I think have a good day.